Happy New Year, everyone. Welcome to Business Incorporated. I am Bisi Adebayo. It's a holiday for markets across the globe to mark the new year. But on Christmas Eve, which was the last trading day of 2020, we saw thin trade across markets. But let's start with the African continent here, where the Nigerian stock market closed positive on Thursday, reaching a new high of 40,270.7, hitting the 21 trillion naira market capitalization. In South Africa, the GSE index was down 0.38%, and in Egypt, the EGX 30 also ended lower, 0.21%, while Kenya closed 0.76% positive on Thursday. Let's take you to the Middle East, where sentiments were also negative on New Year's Eve. In the UAE, Dubai's main index shaved off 1.03%, while the Abu Dhabi index declined 0.84%. Elsewhere in the region, the Qatari index fell 0.94%, while Saudi Arabia's index lost 0.8%. And in Europe, the markets are also closed for the holiday. But on Thursday, which was the final trading day of the year, it was dominated by the coronavirus pandemic and extraordinary stimulus measures that have tried to mitigate the economic hit from, or the economy that's been hit from the impact of the health crisis. The Pan-European Stock 600 index closed 0.14% lower on New Year's Eve after a shorter trading session. Year to date, the Stock 600 index closed down 3.8%, but was up nearly 11% for the quarter. Meanwhile, the French CAC 40 was down 7%. German DAX up 3.5%, and Italy's FTSE MIB down 5.4%. The worst performing market in the region has been Spain's IBEX, down almost 15% this year. Meanwhile, London's FTSE index closed 1.45% lower on the final day that the UK was a de facto member of the EU Single Market and Customs Union. UK banks, retailers and home builders were among the stocks trading low on Thursday, with sentiment likely affected by both Brexit uncertainty and further restrictions on public life announced by the UK government on Wednesday due to the rate of coronavirus infection. For Juliana Olayinka has more for us. Good afternoon, Juliana. It's good to see you again. And should I say Happy New Year to you once again. Now, how much details has been revealed about Brexit, especially regarding banking and services, which are a major part of the UK economy?
Thank you, Bisi. Happy New Year. Well, as you can imagine, 4.5 years of going back and forth means that the last minute rushed post-Brexit trade deal agreement is a pretty complicated document. It's over 1,200 pages long, and unfortunately for the City of London, it barely gets a mention. In fact, the only mention that the financial services gets within the document is a pointer that negotiations will continue into 2021. And this has been a huge issue, not just for small businesses, but very large businesses. The financial service community here in the UK employs over 1 million people. It generates about 7.2% of the UK economy, and it also brings forward 11.2% worth of tax. So it is particularly important. And even during the House of Commons debate earlier in the week, former Prime Minister Theresa May expressed her dismay at the fact that conservative, business-loving Prime Minister Boris Johnson didn't do enough to support those services. But negotiations will continue. What Chancellor Rishi Sunak is hoping is that Brussels will allow some sort of regulatory equivalence for the financial services so that they will be able to continue to gain access to the EU market. We're not certain if that will be granted, because we London really is the financial hub of Europe. Some would even say that over the past couple of years, it's almost overtaken New York as being the central hub in the world for financial services. So there are some issues, but these discussions will be ongoing. I think it's important to point out some of the main changes that will be happening for some of the services. So some qualifications for people that work in finance, who are doctors. Typically, if you studied here in the UK, your qualifications will be recognised in Europe. That's no longer the case. Also, as well, if you're a lawyer or if you provide any sort of service, you no longer can just provide that service without trying to dot the I's and cross the T's. So there are still so much to go through. As I said, it was completely rushed through. In fact, the European Parliament haven't even gone through the document in its entirety. So once the dust settles, all will be revealed.
The Welsh government says plans are in place to minimise port delays as first lorries arrive from Holyhead. Any idea what traffic is like at the ports now?
Well, as you can imagine, the British media are completely camped at all of the ports across the UK, and it's been pretty quiet. And I don't think that's any surprises. As you said, it's a holiday across the world, apart from you and I, Busy. Most people are taking it pretty easy. So I don't think anybody was expecting there to be a rush. However, in Holyhead, according to local media, about 6 trucks have been turned away. And that's because they didn't have these customs declarations forms. And I think that's really the bone of contention. That's where the issues are going to be put in place. According to Rod Mackenzie, he is a pretty senior individual from the Road Haulage Association. He says it's going to cost businesses about £7 billion every year to make sure they've got these customs declarations checks. I think the general consensus is there are going to be problems. There are going to be some teething problems. Some trucks are going to be turned away. And I don't think it's the queues. We've already seen the queues when we had that huge issue with the variant just before Christmas Day. And those are the visible issues. I think it's the invisible issues, not dotting the I's, not making sure you've spoken to the right people or filled out the right forms. Those are going to be some of the sticking points, and we're not expecting them to really start occurring until probably mid-January.
It's New Year, Juliana, but we're still talking about COVID, obviously. The UK reported record number of cases of close to 56,000 on New Year's Eve. I can only imagine how overwhelming it is for the health sector right now, Juliana.
Yeah, it's pretty grim. It's pretty grim here in the UK. There have been so many, points of celebration. We celebrated the Pfizer-BioNTech. We celebrated the Oxford University AstraZeneca vaccination, but we are in a really, really critical period in the second wave. We've seen record number of cases, over 55,000 people testing positive for COVID-19. This is the most that we've seen, and that has been recorded in Britain. In the early peak, we did see over 1,000 deaths occurring every day. We're starting to see those numbers. It's not just the old variant. We've got this new variant, which is more deadly, and it's spreading much more quickly. Now, overnight, one of the issues we've had is that a lot of people in Britain are just not sticking to the rules, whether it's MPs, people I know, most people are out and about, even the police, they've been speaking this morning saying they had to cancel so many New Year's Eve parties, and scientists and health practitioners are just begging people to just start listening to the rules. I believe SAGE, the British government scientific experts, they've even said that even if we do a similar lockdown like we did in March, they worry that it's just not enough to bring down the cases. So one of the main talking points at the moment is what is going to happen to children. They're supposed to go back to school on Monday. That won't be happening. How long are they going to be away from school? There are some local authorities that are even considering not letting kids go back to school until September. So yes, we are still grappling with COVID-19. It's January the 1st. I don't want to start the year on too much of a dull note, but of course, COVID-19 just hasn't gone away.
We can only hope that things get better, Juliana. Thank you. And let's see what you make of the rest of the holiday.
Thank you very much, Bissy.
Well, let's get to Asia now, where shares were mixed on Thursday as well as multiple markets in the region closed early for New Year's Eve. Mainland Chinese stocks surged on the day. Shanghai Composite climbs 1.72% to 3,400. 473.07, while the Shenzhen component gained 1.89%. The Hang Seng Index in Hong Kong advanced 0.31% at 27,231.1. And in Australia, the S&P ASX 200 slipped 1.43%. MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.19%. And the Dow Jones Industrial Average and the S&P 500 rose to all-time highs on Thursday as Wall Street wrapped up one of the most volatile years for the market in recent memory. The Dow closed 196.9 points higher at 30,606.48. The S&P 500 climbed 0.6% to 3,756.07, while the Nasdaq Composite advanced 0.1% to 12,888.28. The major averages hit their session highs with less than 1 hour left of trading. Thursday's moves came after the release of a better-than-expected reading on U.S. weekly jobless claims. The number of first-time unemployment benefits fillers totaled 787,000 for the week ending December the 26th. And at the global oil market space, prices advanced on Thursday but lost more than a fifth of their value in volatile trade in 2020. And that came as lockdowns to combat the coronavirus depressed economic activity and slammed fuel demand. But then Brent and U.S. crude benchmarks have more than doubled from April's decade lows. The start of coronavirus vaccinations boosted demand in the fourth quarter, and prices recovered to the highest in about 10 months. On the last trading day of 2020, Brent fell 1% to $51.14 a barrel, while US WTI crude settled 0.25% higher at $48.52 a barrel. Brent was on track to fall 22.5% for the year, with WTI due to drop 21.4%. And for gold prices, there were little change in holidays thin trade on Thursday, but the yellow metal was on its way to register its best annual performance in a decade. Spot gold was almost flat at $1,893.84 an ounce, but was up more than 24% for the year. That is its best since 2010. And U.S. gold futures were up 0.3% at $1,898.70. Among other precious metals, silver was down 0.6% at $26.44 an ounce. Platinum was up 0.8% at $1,074.33 an ounce, while palladium was up 0.4% at $2,372.04 an ounce. Let's go away from the numbers now. While COVID-19 ravages the economy, the president of the African Development Bank, Akiwumi Adesina, says massive and sustained efforts are needed to help countries tackle the pandemic. Dr. Adesina stressed the need to build economic, social, climate, and environmental resilience to sustain growth and development.
These are extraordinary times. Never before has the limits of science been so tested. The span of our physical capacity stretched to unimaginable limits, and the economic gains we have made over decades lost in the wake of a global pandemic that's rocked economies, people, and institutions. Never have societies and their economies with highly vulnerable populations, especially women, youth, and children, faced challenges of such proportions that have plunged hundreds of millions into poverty, all at the same time, everywhere across the globe. No nation has been spared. The death toll is disheartening. Our collective humanity is at risk, and the interconnectedness of our shared losses is deeply felt every single day. The effects are deep, and they will be prolonged. It will take massive and sustained efforts to help countries, especially African countries, to recover from the impacts of the pandemic. Never has the need for building economic, social, climate, and environmental resilience been more critical to sustaining growth and development. Our annual meetings provide an excellent opportunity to watch with pride and admiration how you, our shareholders, work with palpable passion and collective commitment to advance the mission of the bank, your bank. Whether physical or virtual, the dynamic and enthusiastic atmosphere of the annual meetings always offer excellent opportunities to hear from you on your ambitions for Africa and the African Development Bank.
We'll take a moment now, and when we return, we'll listen to President Muhammadu Buhari's plans for the Nigerian economy. Do stay with us. Trading under the African Continental Free Trade Area begins today after months of delay due to the coronavirus pandemic. With a market of 1.2 billion people, the commencement ushers in a new economic era for the continent, with businesses now open to a single market. According to the African Union, the trading phase under the treaty has been signed by 54 out of the 55 African countries, setting the pace with a market valued at $3 trillion. The treaty has the potential to generate a range of benefits through economy of scale, trade creation, structural transformation, productive employment, and poverty reduction. President of Nigeria, Muhammadu Buhari, is reiterating his resolve to revamp the economy through the National Economic Diversification Agenda. In his New Year message this morning, President Buhari mentioned that his administration is undertaking a series of special intervention programs to boost job creation and engage the youth financially.
Our focus on revamping the economy through the National Economic Diversification Agenda that supports the primary goal of national food self-sufficiency. This has helped reduce the growing food-related inflationary figures and have in considerable measure positively impacted on our food security status during the long months of the pandemic lockdown. We are also currently rebuilding our national infrastructure base and in the process introducing transformation through the rehabilitation, modernization, and expansion of the railway system, national roads and bridges both in rural and urban centers alongside the airports and seaports. The reforms we have put in place in the power sector would guarantee increased efficiency in our drive to significantly expand the generation and distribution of electricity for use in homes and factories. As an administration, we are currently undertaking a series of social interventions designed to boost job creation and support the entrepreneurial drive of our youth. With the recent opening of our borders, we expect that the pent-up demand of legitimate cross-border and international trade will boost the fortunes of the many small businesses and agricultural enterprises that depend on Nigeria trade and commerce. The message to our West African neighbors is that Nigeria is once again fully open for those willing to conduct business in a fair and equitable way.
President of Nigeria, Muhammadu Buhari. The COVID-19 pandemic may have taken its toll on the global economy, but it's not an excuse for government to underperform. But that's according to the CEO of financial derivatives company, Mr. Bismarck Rwani, earlier today on our program Business Morning. Mr. Rwani says the fiscal and monetary authorities in Sub-Saharan Africa must come up with policies to address the economic challenges facing their countries.
But what is true is that the economy is fragile. A fragile situation, and we had pre-existing conditions. So, but if you look at all the countries, almost every country went through, it's a global recession, but that doesn't mean that you didn't have your own problems before then. So what Nigeria is doing is to use the opportunity of fixing the immediate and dealing with the fundamental, which was there before. That you go to the hospital because you had, because you had a minor accident, And the doctor says, oh, whilst you are here, let us now take care of the appendicitis that was already rearing its head. So we're trying to use the opportunity to use one stone to kill two birds. But having said that, let us look at the countries. You find that Nigeria contracted -6 in the second quarter, but now to -3, which means that the level of contraction is reducing. But I must warn that in Q4, the contraction is going to be more than that. It's going to be more because there was NSAS too, because Q4 last year was we grew at about 2.58% compared to this year, Q4, which is going to be much lower. So look at South Africa, Ghana, Kenya, and Ivory Coast. South Africa today is contracting by -6, coming down from -17 to -6. Ghana is going at -1.1, and Kenya is -5. But the more important thing is the inflation rate. If you look at these 5 countries, Nigeria has the highest rate of inflation, which is 15%, and food inflation in Nigeria is 18.3%. Look at South Africa, 3.2%, Ghana 9.8%, Kenya 5.46%, and Ivory Coast 1.7%. But I want you to now look more importantly at the interest rates in these countries. Whilst Nigeria has an inflation rate of 15%, its interest rate on treasury bills are less than 1%. As a matter of fact, negative. South Africa has 3%. In all of these countries, the rate of interest is higher than the rate of inflation. And see what happened to the currencies. Whilst the Nigerian currency before now had contracted by -13, in fact, yesterday the currency went down by another 15 naira. So when you look at it all, it's done -25% this year. South Africa, on the other hand, South Africa's currency has appreciated by 22%. The Ghanaian currency stayed flat about -1.89, and Kenya -7. What does it tell you? It tells you that when you have interest rates that are lower than the rate of inflation, there is a tendency to desave. That is, your savings will drop, consumption will increase, and capital flight will increase. I think that the central bank has that clearly in their view, and they're going to be doing something about it shortly to ensure that national savings is mobilized. At the same time, you don't want to stifle industry and loans and intervention program, but at the same time, you need to strike a balance. What still is unemployment? Unemployment, second quarter was 27%. That is going to increase to a minimum of 35% by when you measure the third and fourth quarters. And unemployment in South Africa is 30%, very high. In Ghana, it's 6.8%, in Kenya, it's 10.4%, and Ivory Coast, 2.4%. So what is this telling you? It's telling you that, one, the pandemic affected all countries, but the pandemic is not an excuse to underperform. Two, that your policies must be consistent, and every patient has its own peculiarities. You can't just use one cut and paste and use one drug to treat all the patients. So for Nigeria, we have a stagflation situation. We have negative growth and high inflation. You got to sequence it. And when you're sequencing, you need to deal with certain things. You need to take care of inflation at the same time, first and foremost. And then you begin to deal with growth and unemployment at the same time.
And on that note, we wrap up today's program. Thank you for watching. I am BC Adebayo. Once again, Happy New Year to you.